And welcome back, it's Jason Walter here. In today's video, I'm going to share a new report from Black Knight. So Black Knight is a data analytics firm that basically supports the real estate and mortgage industries. And they're reporting that housing affordability is now at a 35-year low. So with that said, let's go ahead and dive right into the video. I'm going to share this report with you guys, which is pretty mind-blowing. Housing affordability right now is worse than the peak of July of 2006. So let that sink in for a little bit. And by the way, if you guys get any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Also consider subscribing as well. I post the latest housing market trends so you guys can make a more informed decision about whether you should buy or sell a house. So with that said, let's go ahead and dive right into the video here. And according to Black Knight, it now requires $2,103 or 36.2% of the median household income to make the principal and interest payment, in other words, P&I payment, on the average price home with 20% down. So in other words, for people looking to buy an average price home across the United States right now, their P&I payment for that, based on 20% down, is going to be $2,103. And based basically on the average income across the United States here, this payment of $2,103 per month represents 36.2% of the household income. And this housing payment is now higher as a percentage of income than the previous peak of 34.1% in July 2006 and well above the long-term average of 25.1%. So historically speaking, the average is 25.1%. Now it requires 36.2%. So by my dumb math, that's approximately 50% more compared to the long-term average. And here's a really good graphic depiction showing the monthly P&I payment to purchase basically the average price home across the United States, really ever since 1996 here. Look at this. This is absolutely insane. So basically in 2022, this has been skyrocketing. And this is one main reason why I personally believe that housing demand is going to fall greatly in the last half of this year, because this is definitely not sustainable. I mean, look at the trend lines ever since 1996. We haven't seen anything even close to this trajectory of basically going straight up in 6 months. I mean, going back to 2005 and 2006, you only needed approximately, $1,300 per month in order to buy the average price house. Now it's $2,103 per month. So one thing I want to mention is that I'm not sure if these numbers here account for inflation. But notwithstanding that, this trajectory here of mortgage rates increasing from approximately $1,400 per month to now $2,100 per month in basically one single year is absolutely insane. And here's a really good graphic depiction showing this payment to income ratio. And this is the left axis right here, the percent, and this is the blue line right here. This green line here is the average 30-year fixed rate mortgage according to Freddie Mac. And this goes back to 1996 again. But look at this, 36.2% right now is the percent of income that's required in order to buy the average price home right now. That's slightly surpassing 2006 levels of approximately 34.1%. This is going to be really interesting to see how this plays out over the next couple of months, because as of now, across the United States, home prices have not come down, yet mortgage rates have been increasing. So right now, the average, let me just give you the average right now. This is according to the Mortgage News Daily. The average as of today, which is the 29th, is 5.90%. That's an increase of 2.71 percentage points from 1 year ago when rates were only 3.19%. And going back to this article from Black Knight, check this out because this is pretty insane. It says of the nation's 100 largest markets, 72 are now the least affordable they have ever been since Black Knight started collecting data back in 1995. So 72 of the nation's 100 largest markets are the least affordable than they have ever been going back to 1995. And the last time housing affordability was this low was back in the mid-1980s when the average 30-year fix was approximately 12.9%. Now take a step back and think about this because this is pretty insane. So in the mid-1980s, mortgage rates were approximately double what they are right now. So average mortgage rates right now for people with exceptional credit is around 6%. But in the mid-1980s, the average rate was 12.9%. So basically more than double current rates. But what we're seeing right now, though, is record high home prices coupled with rates at 6%, and that's causing housing affordability to be the worst since 1995. And obviously back in the mid-1980s, home prices were much, much cheaper than they are now. And speaking of that, have a look at this. This is on Uncle Fred's website. The source here is HUD. So these are the median sold prices for new houses ever since basically 1985. So back in 1985, the median sold price, let's just say May 1985, the median sold price for a brand new single family house in the United States on average was $80,100. Now, fast forward to now, the median sold price right now is $449,000 compared to $80,000 in the mid-1980s. Therefore, even though rates are basically half what they were back in the mid-1980s, housing affordability is very, very bad right now, to say the least, because we have near record high home prices, far higher than home prices back in the mid-1980s. And speaking of home prices, according to Black Knight here, home prices are up 8.7% through the first 4 months of 2022. However, though, compared to the start of this pandemic, home prices on average have increased 42%. And speaking of that, that's just the average home appreciation rate ever since the start of this pandemic. But according to Redfin, as I reported to you guys about a week ago, have a look at this, because Cape Coral, Florida has increased by 72%. So the median sold price in Cape Coral, Florida from May 2020 to May of 2022 has increased a staggering 72% basically in 2 years, which is absolutely insane. Also in Austin, Texas, increase of 68.5%. Boise, Idaho, 66.7%, absolutely insane. Same for Northport, Florida, and Provo, Utah, coming at 65.7%. And as I mentioned in my previous video, these areas here that have a big increase in home prices compared to 2 years ago, or compared to May 2020, are seeing a giant increase in price reductions. Because look at this, Boise, Idaho, 44.2% is the share of houses with price drops in May 2022. And all of these are above 25%. So it would be a severe understatement to say that this is definitely not sustainable, especially in those cities, of course. So let's go back to this report here. It says the market appears to be at an inflection point. Higher mortgage rates are already putting increased pressure on home buyers. And because of this, Black Knight is showing a pullback in purchase mortgage demand in early June. So in other words, they're seeing a pushback or a decrease in people submitting loan applications for home purchases as of early June. This is also in line with what I'm hearing right now as well. So I actually talked to a loan officer who works for a large lender, and he says it's basically quote unquote dead. A lot of loan officers are having a hard time finding business right now, and therefore, of course, there's a severe lack of people doing refis. Also, there's a severe pullback in the purchase market as well because of rising mortgage rates and, of course, housing affordability issues. And Black Knight went on to say the following here. Home price growth has begun to moderate. However, the full impact of recent rate increases isn't likely to be seen until late summer and into the fall months. At the same time, tight inventory, which has begun to see modest improvements in recent months, as they've been important to you guys, continues to put upward pressure on prices though. However, though, they said we will continue to watch these trends and report them as they develop. I mean, I've been reporting these housing market trends for you guys almost on a daily basis. And I feel like every single day there's something to share because this housing market and mortgage market has been very, very volatile this year. And speaking of housing inventory, which of course is the total number of houses for sale, let me give you an update. So this is according to AltosResearch.com. This is, again, AltosResearch.com. They have a great YouTube channel if you guys want to check that out. They report weekly housing market trends across the United States here. So they're reporting that housing inventory for a 7-day moving average is basically at 444,000. So as of June 24th, there are 444,000 houses for sale across the United States. But look at this time last year. We had approximately 359,000 according to Altos Research here. So right now we have approximately 100,000 more houses listed for sale compared to last year according to this data here. Again, 444,000. Compare that to 2020 at this time. We had approximately 676,000 houses. And back in 2019, more or less, we had approximately 957,000 houses for sale. This is something I'm definitely tracking basically on a daily basis for you guys because look at the trajectory here of housing inventory. We basically started at March at approximately 240,000 houses for sale. Now we're at 444,000, a big increase since March of this year. And because of this significant increase of housing supply across the United States here, we're starting to see more price reductions as they've been important to you guys. So Altos Research is saying that the share of price reductions right now, at least for the 7-day moving average as of June 24th, is sitting at 29%. 1 year ago, it was only 19%, so a big increase compared to 1 year ago. Also, the trajectory has been going up greatly as well. We basically had a low back in the middle of March when the 7-day average was basically just under 17%. Now we're basically at 29%. This is also higher compared to 2020 as well. So in 2020, we had approximately 24%. And again, now we have 29%. But back in 2019, we had approximately 34% of properties with price reductions. And as Black Knight reported here, we're not seeing a shift in home prices just yet due to a decrease in home buying demand. So here's the latest for the median list price. This is basically the average listing price in which home sellers ask for their houses, right? So the current 7-day average is basically just under 454,000. That's actually very close to all-time record highs. I mean, compared to 1 year ago, we were at basically $400,000. And back in 2020, we were at basically $350,000. And back in 2019, at approximately $335,000. So we're not seeing any significant movements regarding home prices on average across the United States, even though there's some clear signs that home buying demand is decreasing due to rising home prices and of course, spiking mortgage rates. So comment below with your biggest takeaways from today's video. Also, if you got any value out of today's video whatsoever, then please hit the like button and greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.